All right. Good afternoon. It's been way too long. Way too long. Jip, I see you. Strutters, I see you. Polo, I see you. Everybody else that's a first-time chatter, I see you. Stasi, how we doing? All right. How much time do I have? We have 30 minutes until we get our FOMC numbers. An hour away from the press conference. Should be a good one. Should be a good one. I'm not coming back for no reason. All right. Can we go live? Are we safe? Let's find out. All right, 3, 2, 1, have magic. How we doing, boys? Let me take this off. How we doing, boys? Long time no see. Matrix, I don't see you, but I see you. See what I did there? Okay, this thing is... You guys have to see my aging face. All right, guys. What are we looking at today? We got everything open. We got our tape open. Spaghetti. I don't know if we're going to be using this today. Ooh, very, very framey. Bunch of stuff going on here today. All right. My Teal Street's open. We're good. We're long peanuts. We're long peanuts, but we're long something. Just to have some fun. Just to have some fun. Today's been pretty wild so far, wouldn't you agree? The Jenner man, you're not supposed to know that. You're not supposed to know that. How'd you know? How you looking at my screen like that? All right, guys, we got some people slamming buys on spot. It's good. How do our funding rates look going into this FOMC? Grinding more towards the neutral area, which is something we'd want to see towards the range highs. I wouldn't call it like the factor, but like the deciding factor, but definitely something we want to see is, more perp interest being built up here as we grind into range highs. It's looking better than it should, for all the oh, and I have 2 chats here I'm gonna have to maintain. So if you guys are on Twitter, it's my first time. So please do forgive me. I have to toggle between 2 chats here. So yeah, given the sentiment, or at least through what I've been seeing, I think everybody's just overreacting a bit. I think we have a good FOMC coming up. I think we had a really nice surprise today on the CPI numbers, and that's for sure gonna lean Daddy Powell in the way that we need it to go. Yo, Strutters, I'm pretty sure I saw you yesterday in Oda's chat. I'm pretty sure. It's just this chat moves so fast now. I can't keep up with the comments. Why am I on legacies? That's weird. Oh yes, we were looking at the dollar. So we're seeing some weakness on the dollar here. Kind of falls in line with what we might be expecting today. Significant weakness, rejecting a daily supply for a number of months now. I would expect this breaks down, but stranger things have happened. My game plan for FOMC, well, it's changed a bit, right? It's changed a bit because of hold on, let me lower this volume over here. It's changed a bit mostly because of our slightly missed expectations this morning. Not in a bad way, in a good way, and I think it caught most people off guard. Realistically, we're expecting lower rates, right? Do I think it's this month? I don't, but maybe for next month, and I think we're gonna have a really, really good sort of meeting that's gonna lean more on this. So that's what I'm going in for. I'm already long. So the thing is, if we get what we want to hear, if we meet our expectations, and in better, a rarer case that we actually surpass our expectations and actually get like a rate lowered this month, which I don't think we will, but just to say, like I can only assume that will benefit the position I currently have. I kind of had to chase here. It is what it is. Had to chase. So the market be like that though. But really what I want to do is I want to catch like a strong performer today. I mean, it's been a while since we've been able to pull that off on stream. So let's do it. Also long from 67K remaining bids didn't get filled. Where would you look to compound now on BDC? It's tough. It's tough because you're in the range highs, right? So realistically, your best action here, first and foremost, when you've been given a range this long, right? Like the last thing you want to be doing is making decisions like this. And I know it's kind of funny, but it's CPI day, right? So we had the volatility to expect. So it's pretty much like an insta long. But all this to say, if you're looking for swings, right, and like what's the next course of action from here, like really, it's hard to make a trade in anticipation of a breakout, right? How many times has that failed for people? And this doesn't just go for the upside, but also for the downside. So typically the best bet going into this, and I don't like to say it because it's BTC, it's bullish. Never like to sell against that, but most people that are probably long from the range lows are probably looking to hedge up a bit here and buy back if they're wrong. They'll take the haircut in anticipation of potentially buying back towards the range lows, right? So the best compounding strategy I have for now, since we're at 69K, would be to buy the clean break of this range. Like there shouldn't be like any long-term conviction play in between the range, right? That's chaos. That's chaos. Then again, very, very tricky. It's really hard to want to play a level on the mid-range, right? For me, it's just not ideal. It's used as a good reference, but to trade off of it, it's a bit more. I'm a bit too zoomed in over here. I don't like how I'm like just all like crumpled up like a shrimp over here. Yeah, so I spent enough time talking about BTC. Anything else you guys want me to take a look at while we're waiting for the shoe to drop? Where can you spend 50K channel points? Strutters, man, I'm so behind on this fucking stream game. You know by now, I pretty much took like a 2-year hiatus. I'm so out of the game. God knows where we would have been if we continued. I don't know what to do with channel points. If anybody's good with channels and chats and stuff like that and wants to help me out, there could be an incentive for you if you're into it. But oh, come on now, OXO. This is one of my spot bags. Let's go. 2 allocations now. More than I'm comfortable losing. So 0 or hero on this one. Not a shill. Again, I'm buying a 60% drawdown. So if it's not here, then when? I won't be shilling this, but it's a play I have. INJ, please let it be today. If anybody's watching in here, you know in the group how bullish we've been on INJ. We stacked all these bids here. Is it about time for us to take off? Please, guys, please, my family. We've been waiting too goddamn long for this. Let me take a look at my Solana bag. This one's doing a little bit less convincing. I'm not too convinced with this. I still think it's you know, bullish, but like, you know, a whole W bottom, man. What was this gonna take? Like, they're really gonna make me wait like another 3 months for generational wealth? That's so annoying. No fucking way they're doing that. All right, whatever. But yeah, all this to say, 134 to 125 average in. Great position. Any traditionals I'm investing in? Can we consider BDC a traditional yet at this point? No, honestly, I'm all out of TradFi. I've lost faith in this system, and I'm sorry if that's doom and gloom. It's not a system that's rewarded me, right? It's only But I am a believer, and I'll tell you this much. I am a believer in no matter what you buy, in the sense that we assume that the company, and this is for TradFi, right? And I'm no financial advisor, but enough to know that, you know, when you're dealing with common stock, right? If you assume the company has no reason to have lost any valuation of what it's worth, and you assume that money is going to continuously get printed to make up for, or to refinance debt, and you're going to assume that lower rates, you know, also mean more speculation, you just have to assume like anything that's considered below its valuation or what it should technically be worth is just an insta buy, right? To me, that would be my strategy in the TradFi market. Is if it has no reason to be considered undervalued and it's actually trading at an undervalued price, like what is stopping you from buying that? Common stocks are a bit different, right? They're less speculative. There's balance sheets and there's staff that you can consider, and there's assets and property and revenue. There's a bunch of numbers that you can actually base a valuation on, and other people will too. For BDC and crypto, it's a lot more speculative. It's simply buyers and sellers, and narratives and no narratives, right? So keeping that in mind, My field is more in the speculative markets where we're looking at straight up mechanics and data and nothing more than that. TradFi, you know, requires a bit more of a vision for the particular field you're trading in, right? In this case, you know, crypto's my field. And ooh, dang Ross, no way you just hit me with the subber, my man. There's no way you just did that. Thank you very much. It's very appreciated. All right, we have 20 minutes. There's no way I was just talking for 10 minutes straight. What do you guys want me to look at? I'm bored. Well, this song is not helping our situation over here. Oh. Are we at 315 viewers? Is that right? Or is that because of Twitter? $332. Damn, we have quite a bit. This new X streaming is helping a lot. That's awesome. Finally getting a bit more of my audience here. It's good to see you guys. If it's your first time chatting here, if it's your first time here, we do these FOMCs what we used to. We don't do them too often anymore, but you know, markets are getting kind of exciting again. So it's time to start. It's time to start. You know, getting back on the camera, which is going to be an interesting one. I'm ready for this next phase. I have no reason to assume it doesn't continue here. So hopefully that's enough copium for you guys. I just don't see it. So. Thragas, how we doing? I know that name. Have I looked at Sol? I looked at it briefly, but we'll look at it again. 85 on Twitch and wow. Okay, so majority of the viewers are coming from Twitter these days. I look like MK the DJ. I'm not sure I know who that is. I'm not sure. Do you think Powell will start with dovish or hawkish? I think the word we're looking for is dovish this time. I think he's going to come out saying, well, you know, we're meeting numbers to handle inflation and it's looking more likely with the data we have that you know we will reach our goal of 2%. Like you can hear it in your head already. You could already hear it. We're meeting expectations of 2% and the possibility to discuss lowering rates has been, you know, like you could see it coming. You could see it coming. So I'm gonna go with dovish this time. I think they got better than expected, even though, you know, higher than previous. I think, you know, I'm curious because that's like, if it doesn't come out like that, I think a lot of people just may have overreacted today. That's how you can also see it, right? It really comes down to this. You know, are people thinking the way I'm thinking, and then Powell's gonna be like, psych, gotcha, you know. There's a lot of dynamics to this, right? So that's why we're just gonna go along with it. We're long from 68.2. It's not the best entry. It's quite sloppy, but it is what it is. I'm undecided how I'm gonna go about it. When's the last time I actually had an open trade on stream? It's changes it a bit. So let's see. What's up, Rob Carlos? Oh my God, we're starting to see a lot of the old names. I hope to see you guys in here more often. What is your advice to learn on entries because I suck at it? I'll answer that question in just a second. I seem to have missed a bunch over here. First time joining your stream, do you live for trading? Do I live off trading? Yes, I do. Yes, I do. I've been doing it since... How long's it been now? It's been over 3 years, May 2021. I quit my job in May 2021. I was a sales executive, and I was really happy there. I would have kept going if it wasn't for the whole lockdown stuff, which really changed the whole dynamic of sales. So I would have stayed. I'm quite bored trading full time. I won't lie to you. Like gives you a lot of time. Don't get me wrong, but if you're not that interesting of a person, which I don't think I am, you have too much time on your hands, and that can never be too good. Do I have spot FET on this dip? I do not have spot FET, but let's take a look at it. I'll take a look at Solana after as well. I haven't forgot about you. We're running close on time here. It's good to see you guys again, honestly. It's been a really long time since I've done this, so I'm happy we have a strong viewership here. We're approaching 400 viewers. It's quite impressive. FET looks really, really nice, man. At least on the intraday. The daily, the 4-hour says otherwise. I need more data. Hold on. This probably came out on Binance first, if I'm not mistaken. Fetch, right? Yeah, absolutely. Dude, I just saw it. Why does it play with my head like that? Okay. All right, so look, I've mapped out 2 levels in the past. The original response from this level has kind of weak. 200 EMA touch. Man, I'm a greedy piece of shit, so I'd be really going for 1.2, 1.0, but I'm not gonna tell you guys that. Honestly, the 200 EMA is a really nice touch. The only worry I have is probably rejection from this level here, the breakdown, which was holding as a really nice supportive demand here. So to be failing and falling through on the 4th, to see weakness over here would probably not be the nicest. But for a spot play, right, would you rather be buying, you know, at 1.95, or would you rather be buying, you know, like a good 50 to 60% drawdown, right? This is an area I usually look towards whenever I'm playing speculative alts. So like OXO, for example, I have the same sort of, or I've had the same sort of analysis where I have an allocation up here and an allocation down here. We try to even it out because there's no telling if we actually get a strong bounce. Like, you know, if I was targeting all this over here, right, and we ended up just straight up ripping from here, well, that doesn't really do me any favors, right? So for FET, I have 2 levels I really do like on this chart, but at the same time, no guarantee that both get filled. I'm not in a play on this, and I have no desire to be in a play on this, so please do take what I say from an outside looking in perspective. Canada cut, maybe everything is connected. Oh, absolutely. A lot of things are connected to the US dollar. They don't really have a choice, right? It's one of the greatest weapons of all time, but let's not talk about that on Twitch. Do I use leverage? Or no, you were talking to someone else. My advice to learn on entries. First and foremost, learn a system, something that resonates with you. This could be supply and demand. This could be trading fucking triangles, bleeps and blops, ascending wedges, bull flags, bear flags, go fuck yourself flags. It doesn't matter as long as you're sticking to a system and following a set of rules. The only way you get good entries, good stops, and good take profits is when you follow a system of rules. After that, it's out of your control. It's either the trade is able to be taken because your rules are being followed, or you can't take the trade. And you simply just stay out. That's a discipline thing. That's something you learn, you know, after getting slapped across the face many times for just not listening to yourself. So hopefully that provides some insight to you. That there is no perfect entry. Like that, you know, if you're in the business of trying to find like perfect entries and perfect, you know, take profits, that's not really the game we're in. We're in the game of catching the overall move. So if you're asking me how to get better at entries, get better at a system. And tune that system. Don't just switch it because for 5 trades it's not working and now I'm a fucking ascending wedge trader. You get what I'm trying to say? It's data. So the more you compile, the more you put on aggregate, the more it's going to show you progress. The more it's going to simulate future outcome. So just keep that in mind. It's a steep learning curve. It's really hard to see progress immediately, which really discourages, you know, people that are just getting started, but you stick with it long enough, you'll start to see progress. Maybe not be the progress you're expecting, but you'll definitely start to see progress. Ruben and I'm gonna say Ruben YC7. There's no way you came back to my chat and asked me how Luna's doing. I don't know if you're trolling me. Let's take a look. I haven't seen Luna since I went to 0. There's no way you just came in and asked me how Luna's doing. I feel like I just got teleported back to 2021, bro. As we would expect, oh my goodness. I can't believe this was a thing in our history. Like, I can't believe it. I can't believe it. If you ask me how Luna's doing, I thought we left this one behind, my friend. I don't even know. I thought this went to 0. I don't even know how it's still trading at 58 cents. It realistically does nothing. That's just crazy. Yeah. This is Tony Hawk's Pro Skater. This is not even Tony Hawk. This is I don't even know what you can call this. Tony Hawk wouldn't even try skating this. Like this is not even a Tony Hawk ramp. At least Tony Hawk has, like, you know, like a ramp. This is just straight hold this L. Like you can't do anything. Yeah. This is just really bad. Like I just find it so funny you asked me to take a look at Luna at all things. 10 minutes until FOMC numbers, guys. Yeah, the Grand Canyon. It's really bad. Gaytona says, LOL, this is Rego's face. Finally have a matching face with this analytical voice. I hope it doesn't scare you and terrify you. Here. Get a better look. There you go. There I am. I'll never do it again. Guys. You have my apologies. Ooh, bonk. We're just having fun. We're waiting for these FOMC numbers to come out, and then we can get to work. What do I think about a zero? Oh man, you guys are asking me all the weird ones. I'm just kidding. I've heard about a zero many times. We're going to look at it from a completely technical base, just because I don't understand too much of the fundamentals. So please forgive my ignorance. You're asking a trader what his thoughts are. What would be the best chart to go about here? I don't like the fact that there's like literally nothing. Oh, okay. There's more of it. No, there isn't. Thoughts on INJ? Ooh, we could talk about INJ all day, baby. So we started averaging in buy. So upon this original, so I'll inform everybody who's probably not in the group, probably just hearing it like this. Upon the first initial drop, we had buys scattered from 31 to about 25. Now, we had to stomach a rather volatile flush into 17, which is not something I anticipated. So we just had to kind of just sit on our hands with the spot allocation and just trust our system. And now we're starting to see it come to life. Still got a way to go because the cost opportunity of holding this for about 2-3 months, very, very painful. But overall, I do expect to at least 45. That's the trade I have. So for INJ, 31 to 25 average, about a 27.5 average is what I walked away with on spot. So we're looking to offload at least give back our initial buy-in around 45 and then hopefully carry it into price discovery. Because I don't believe we're done yet, not for a minute. I think this is going to continue going. Why are people so bullish on OXO? New exciting projects, bro. That's the thing. When it's new and exciting, there's this, for the most part, I don't believe alts do much of anything. And watch my viewer count just drop like a sack of potatoes. It's just the truth. Like we're trading them. That's what we're doing. We're trading them. It's not because we actually have a belief in this thing. And of course, there's the AI narrative, which is very, very buzzword, right? How much percent do I risk for intraday plays? It depends. It'll be anywhere between 0.5 to 3%, but more leaning towards 0.5 to 2%. It's very rare I'm in a 3% scalp for the day. All right, we're starting to see spot buys come in. Ooh, clips on Bitfinex and Binance on spot. How's our... 0.79. How's our tape looking? Let's see, guys. This should be a good one, man. The name of this song, like the one playing right now? Yeah, but Eblo, my risk on intraday scalping is relatively small. I try to keep it 1 to 3% of the total portfolio. So there's a scalping portfolio, right? And then there's like a daily swing portfolio or a long-term portfolio, right? So I try my best not to, contradict either or. Intraday operations are on a intraday basis, right? So we usually use a pivot M15 pivot strategy, which usually follows the 200 EMA or a QE EMA, I should say, and the pivot. So pretty much, long story short, we use this as a mean bias of the day. The pivots pretty much just follow a traditional Fibonacci. So they reset on every daily candle, and those are our intraday targets for the day. So we try to keep it fun, like a mini game, while our spot plays and swing plays pay off, right? Because if not, we get bored. If we get bored, we make mistakes. If we make mistakes, we're not really happy, are we? The one playing right now is called In the Dust by Richard Judge. How do you draw those? They're automatic. So the beauty about, this pivot point standard, it's right here, by the way. Pivot point standard right here. You're going to click that. Number of pivots back, you go to 1, because if you have 5 of them, it's going to show you like every daily pivot we've had for like the past 7 days, and you don't want that. You're trading on an intraday basis. Then it's going to say traditional. You're going to want to go to Fibonacci, and there you go. You have your fibs, which is probably the best way to trade markets that are entering price discovery, because nobody really knows where to sell at, what the actual prices are, or what the actual valuation is worth, right? So you're going to want to go on like something that everybody's looking at. Top 3 indicators for trading, I use them right in front of you. It's the 200 QE the pivot point standard, and the volume oscillator you see below here. I use this for my M15 strategy, and then for daily, I don't really need indicators. I just need naked candle charts. So pretty much any inefficient gaps like this where we consolidate briefly after a large expansion, it usually leads into another one. This is usually a rather large inefficiency, and it's an area we target. As you can see, when BTC is being stubborn, and very, very aggressively bullish. For people that don't want to believe it, like just look at the past year and a half. This is what you call an aggressively bullish trend. Sometimes getting these demand areas are quite difficult. It's not so easy, is it? What do I use for swing indicators? Like I just said, naked eye mostly. Then following of some resting order business to support my idea. When it comes to daily, weekly swings, you need to have more of a conviction on your outlook of the market and less on your technical indications. The technical indications are going to help you spot an entry, but the thesis is what's going to have you hold it, right? Pocky, how we doing, my friend? I got to be able to put another interface in here because it'd be awesome to have you come in. We have like fucking 480 viewers right now. It's going nuts. OXO is a DEX. Should be. It's its own protocol. Like, and every year you're gonna see new tech, new things arrive. It's just every cycle. It's always like that. Something always has thoughts on Hash AI. You guys are asking me a lot of questions about AI projects, and I don't want to hurt people's feelings. Just play narratives. Play narratives while they still exist. That's all I'm gonna say. Play narratives while they exist. They could perform extremely well for you guys. Just don't get married to the ideas. But I do believe in the next exciting thing seems to be the AI wave. Just like we had gaming last time around. I do think that's gonna be the buzz topic. So I'm not fudding you out of your bags, not a bit. But if you can ask me my personal opinion on it, that is anything to do except a technical outlook on it, which is very, very hard because a lot of these things are so new, right? Like there's not much data to go off of, unfortunately. So like I have to be really, really careful with the words I say. I don't want to inspire or, be the cause of anybody's. So we're gonna sit tight here. We have 2 minutes until the numbers get released. Expect some volatility. It's gonna get pretty bonkers. I'm not distracted. I'm just looking for the numbers because it's about to come out any minute now. Just want to make sure I have my stuff ready. So just so everybody knows, we're a minute away. I'm already in a position. How we react, like I think rates are just not going to be changed. So again, that should just continue as usual. If for some reason rates get higher, I really do think we're fucked. But I think the real thing we're all paying attention to here is, will they manage to lower it? Which I don't know if they will. If they do, that would be very, very interesting to me. Let's see, guys. Oh, God. Well, there you go. That tape is going absolutely mad. We're going to get round tripped. All right, came in as expected. Yeah, came in as expected. Damn, am I going to get round tripped in one single candle? I think I am. Oh, that's boring. Woo. Guys, imagine getting liquidated at $68,000, $69K. We knew it would be an exciting one, right? Let's see. Oh, shit. Look at this whipsaw. Look at this whipsaw. What are we in 2020? What is this? I'm too scared. I'm too scared to look at my my teal street right now. I'm too scared. Damn. They tried really hard to shove that. That's it's not over yet, but fuck. I mean, that's met expectations. What's so bad about that? Predicted going higher. How's the open interest? Lot nuked here. That's interesting. I don't see how this is. Like I think we all expected this, right? Like nothing to actually change, right? Were people actually expecting rates to be lower here? Because if that's the case, then they're dead wrong. Yeah. We saw them. We saw them over here. Where the hell's my thing? We saw them over here. I mean, what the fuck was that? Look at that whipsaw, bro. Dare I say the good times are back? Look at that volume. People can't say there's no volume. This has been fun. This is fun. We're having fun. It's just so whipsaw. I don't like how he broke down though, man. I fucking hate it. Am I just being a greedy pos? I think I'm being a greedy pos here. Two take profits, and I didn't close it out yet. I may just be a greedy possum. Fuck it, we do it for content. We're doing it for content. $100, bro? Come on. Please. Oh, this one's tricky. This one's tricky, guys. I'll give it to them. This one's tricky. Because we met our expectations. What a mess. Look at all these liquidations, dude. Why are we trading with so many baboons? Like why, dude? How does one 15-minute candle just light up my whole liquidation tab? Ah, it's disgusting, dude. It's disgusting. And we're not even talking like we're not even talking 5% moves here. We're talking like 2% moves. What's going on here? What's going on? The space has been littered with degeneracy, and you see it in the books. It's like it's more desperate than it's ever been. It's so weird. Yeah, this is V3 AGGR trade. I'll post it in chat right now, actually. I got the I'm pretty sure, I don't know if Matrix is still in here, but he's the one that gave me the configuration for it. I think I'm gonna sell this. Man, we got nuked for fucking a good chunk of the trade. And do we go re-long during the FOMC comments, or should I just wait out this 15-minute candle, man? I don't know. Yeah, Miney Smith. We're gonna wait to see Powell's comments. Lars with 3x Solana buys. Very nice, impressive. I mean, I would assume unchanged rates for like the fourth month in a row are you know, better than raising them. But I'm actually quite shocked that maybe the consensus was that people thought rates would actually get lowered here. I don't know how that makes any sense, but all right, we're back to R1. So let's just close this and enjoy the rest of the stream, you know, without fuck. And then I'm gonna close. I already know how this goes, but we're gonna do it anyways, just because I want to enjoy my stream without having to check. Now watch. I'll tell you what. On stream for the boys and girls. I don't know. You give me back to 68.2. We'll take a long. During FOMC, if we start to walk it up back above here, I'll rebuy back above 69.8. Fair enough. We're in the range highs. I don't want to shove too much. Even though the news is good and technically there's nothing to assume why this would just dump here, but man, if there's one thing I know, call it a hunch. Yeah, it's either I'm getting bogged all the way, but yeah, we're just gonna close the scalp. I want to take a dub today. 100% win rate this fucking stream. Can't tell me nothing. Oh, I can't wait to see this rip into 70K. Watching me close for 70 bucks. Who's ready to see? Who's ready to see it happen? How many times does this happen on stream? Too many fucking times. Is there anything I'm missing? We're getting a lot of first-time viewers from Twitter. So hello, if you guys are from Twitter. I haven't taken a look at ETH all day. Okay, so that's less convincing. 3674 was a big level for us. Why are we rejecting it? However, nah, I don't like this. I don't like the structure of this. It's flushing out. If that's flushing out, then that means the pivot, 200 EMA, probably if it walks a bit down more like this. I don't know if I'll have enough time by the end of the day to find a setup here, but I would assume this goes like this. Price probably shuffles in between it. Looks something like this. Finding strength above the 200 EMA and pivot is what we would need to trigger along. The only worry I have here is taking out these lows once more. I would need to look a bit deeper to see this. What can I look at right away to help me? Perps going long, so I'm gonna assume ETH goes to try and take out these lows again before going back up. It's either that or we shuffle, do a bunch of nothing, chaos, come back for the flip, hold these levels by the daily close, pivots reset. That should give us a trigger for the long. That's what I'm looking at least for ETH. Don't think I'm gonna take anything just yet. Gotta respect how it's not taking out this. So we're gonna look at that. It looks a bit different than BTC, right? What's up, Bilu? It'll go lower? Possibly. Very possible. But a nice little bounce, though. I really do think you should still be in dip buying mode. The only thing is, on the daily, you got to take note of the fact that, you know, you're grinding into these range highs, right? So, hard to take trades towards a range high, especially if you have a bullish bias on a lower time frame. You got to respect the bigger time frames, right? So, what do we think about ETH outperforming BTC? So dump is coming. I don't think ETH is outperforming BTC just yet. Not right now, at least. But we are in the part of our cycle where, you know, you would expect a rather large rotation, or at least eventually. But dominance holding strong at 55.6. I'm expecting it to roll over here. It would shock me if we continue gunning higher. But realistically, like, this is what we've been expecting, and I would assume that rotational play happens eventually. Am I gonna get bogged here, guys? Live on stream, first time back. I thought you closed 70K for what trade? Could I repeat what I expect to happen now? It's already going against my expectations here, if I'm being completely honest with you. Nothing changed. Nothing changed. The only thing we could realistically go off of is the data we got this morning. Everything else is kind of came in as expected, so I don't get the overreaction. At the same time, that overreaction caused me to close my trade, so figure that one out. It's been a difficult market in terms of sentiment. Like up is down, left is right these days. It's been a bit more. It's definitely more competitive than 2020. Like as easy as this looks in hindsight, this has been no joke. This has been no joke on the intraday level. It's been pretty difficult. First and foremost, because it takes a couple weeks to realize you're ranging, and then once you're ranging, it just kind of does erratical things. Like it just starts irrational things. It just starts like doing like really strong breakdowns, like fake out breakdowns and fake out breakouts. Like no, not the 68.9 level. It was the 68.2 level. I pretty much had to long the breakout like right here when we got the CPI numbers. So I ended up closing it for right here. So really that was a nothing burger trade. Usually I hold it into R2, R3 on 33% take profits, but I got distracted with stream. Some of these things are popping off, man. Is anybody in any trades? What are you guys trading over here? INJ is going bonkers. PHB? On which platform? Bybit and Bitfinex. So Bitfinex I keep entirely personal. I don't show or disclose anything regarding that. It's my big portfolio. And for stream content, we'll trade on here with anywhere between 5 to 10 grand. So Bybit, and we use Teal Street as a terminal, just because it's a lot easier, I find. Long on BTC from 67K will compound when you long again. I love it. When people ask me where to long BTC, it's much easier to talk about. Caught INJ at 25.7. Nice stars. That's a very nice trade, especially if it's a futures trade. That's one hell of a move. I mean, we're spot allocated to this, but we had to eat shit for like a good 2 months, 2-3 months. That was really tough, but hey, it is what it is. It's gonna pay off. In the words of Michael Burry, I may be early, but I'm not wrong. Some of these things are just popping off. Nice stars. What about BNB? How's my shining armor looking? Ooh. You see what I mean by like these range plays? They've just been breaking out convincingly too. Not like a fake breakout, but like a really convincing looking breakout followed by Burj Khalifa tourism round trip. It's so fucking frustrating, man. There were so many times in 2020 you would just get away. You would get away with this like it's nothing. Like you would long right here. You're like, that's it. That's the breakout, and you would just get away with it. And then it would just consolidate sideways, grind up sideways, and it just could keep going. You know, it was just like realistically impossible to get shaky hands. This time around, man, they'll give you everything you're looking for. They'll give you the higher low, the squeezing, this coming up, and then it's been like that on every chart, man. Like it's been so frustrating. Only wrong if you're in leverage. Thankfully, we don't use too much leverage though. At least not anymore. I try not to. Yeah, I may have like just panic sold. We're rusty. When's the last time I had a fucking public stream? We're rusty. Federal Reserve pauses interest rate hikes and remains at 5.25 to 5.5. Can't ask for a more calm scenario going into this FOMC. We're 15 minutes out. We'll listen to a bit of the press conference. If it's everything I need to hear, I'm just gonna summarize what I think is gonna happen, and then we move on. I'm pretty sure we'll be okay with that. CB buys coming in? Oh, I don't see it. I don't see too many CB. I see a lot of perp pushes though. I do like how Coinbase is leading though. Man, I got fucked. No way they did that. No way they did that to me. Ah. What are you gonna do, huh? Imagine getting mad about making money. Fuck, man. Shit. That's right, Minotaur. Imagine being sad about walking away with more money in your pocket. That's crazy. Ooh, big buy over here. OKEX, what are you doing over there? Market maker in the stream, probably. Pretty wild, huh? All right, buy it all back up. Let's go. Oh, no way I missed that. I still think we're going to get this on Pepe. I'm going to keep this here. I like this idea actually a lot. The only thing I don't like is how we kind of just swept just above that. That would have been my entry. That's too bad. Ooh, ENS. How's this looking? Ooh. I mean, I've seen worse. How's the intraday look? Can we scalp this? I mean, it doesn't look the worst. Ah, pivot's too low. I can't trade this. I have to wait for a daily reset. I'm going to flag this just because I need it. I need to see this for tomorrow. What else was I looking at, man? Yo, a lot of these AI projects are popping off over here from what I'm seeing. Pretty nice. I can't find what else I was looking at. That's too bad. Does anybody have a link to the FOMC thing? Oh, you guys are awesome. Look at Chad hooking up. Look at Chad hooking it up. I think we'll do the Federal Reserve one. Means I'm gonna have to pause this music. We're probably gonna get like new employee video music while we wait for this to. Yep. Yeah, we're getting like some deformed version of Toto by like Africa by Toto. It's some weird elevator version of it. Yeah, we're 10 minutes out, 11 minutes out. Yeah, it's like an employee training music song. All right, we can turn this off for a bit. I'm just going to mute this until he finally comes to speak. I got completely bogged. They really made me sell the bottom here. Ooh. Is that Adam? There's no way we see Adam in here. Adam, how you doing, my brother? Is that a blue Manchester CR jersey? You're very, very close, but no, it's actually it's signed by Luka Modric and Cristiano Ronaldo when they won not their last Champions League, but the one versus Juventus. Can't remember which year, but yeah. See. And over there is a signed jersey from Sergio Ramos. I think his last year with Madrid. Before he went to PSG, if I'm not mistaken. Yeah. That's signed Carey Price, and that's a signed jersey from Real Madrid's basketball player, Fabien Cozer. Did I get them signed myself? This one was a gift from the Real Madrid basketball player. I had helped him with a couple crypto things in 2021, and as a gift, he got me the Ramos jersey signed by him in my name and stuff like that. Guy legit only streams during FOMC. No way you just said that. I actually haven't streamed at all. This is my first stream in months. It's got to be months now. Yeah, it should be the 2017. I can't remember when they won the Champions League with the purple jersey. All I know is they beat Juventus 3-1. Mandzukic scored like a crazy goal. I still remember that. Traquan, how we doing? Yo, all the old guys are back in here. No way you guys are back like that. What do you think of the lowest we go in the summer? I'm just going to assume the lowest we get is the range lows, which is anywhere between, ever since that fake out down here, I'm going to say it's anywhere between 58 to 60, but realistically 56. The lowest I want, if I'm going to assume this is like a really, really, really long breakdown, like 50 to 53, but you're being very optimistic here, and I'm not going to tell you to wait on that, but range lows to start 58 to 60. That's I think the lowest we get if we're still in our bullish environment. And real doomsday 30% pullback drop, whatever you want to call it, 50 to 53 is going to be the area I have. It's the area I want so desperately, but no telling we get it or not. So did I get Modric to sign it? I again, those ones are gifts. I didn't actually go like, oh my God, Luka Modric, I'm such a fucking fan. Can you please sign it? It's a gift. So. We're holding quite strong. We're holding pretty damn good. Yeah. I mean, for range highs, just don't be fooled. Don't be fooled. Be cautious up here, especially if you have an intraday strategy going into a big event like FOMC. Let's take a look at something else here. I mean, rates are coming down, so people are rage shorting this. That's the worst part, is that people are rage shorting. Like, that's the thing. It's like, instead of just waiting to see what happens, it's like, no, fuck that. Got to open shorts. Got to make a decision. Got to do something. Anything. You know, and it's just bad practice. It's bad practice. Best thing you want to do is just stay hedged up over here. We make a new clear high. You take a haircut. You buy back in. The worst thing that's going to happen to you is you get faked out. You know, it happens sometimes. But being this many times knocking, I would assume this breakout, next one's going to be for real. Dovish or hawkish? I think it's going to be dovish. I think we're going into some nice, soft, soothing copium words. I really do. Daily flip to a downtrend. I don't call this this is not a downtrend to me on the daily time frame. This is not a downtrend, not even in the slightest. It's the hardest thing to say this is a downtrend. Like, they're trying to bait you with the cycle top, and they're trying so hard to bait you with that. Like, they really are. They're trying their hardest, their absolute best to bait you. Thragus, we got a new camera. That doesn't happen no more. We've made some adjustments, if you will. And we could do this camera on demand. You feel me? Look at this. Look at that shit. There will be no overheating today. Entire CT is a psyop. I tend to agree. But more than I think it's a psyop, the more I just think it's a bunch of... Actually, I don't want to say that since I'm streaming on Twitter. And I mean all due respect, but it's just like... You could tell. You could tell, like, people that have no confidence in their system, their strategies, or whatever it is that they're tweeting. It's just for farming. It's farming engagements, farming impressions. And there's nothing wrong with that. It's just, you know, like... If you've been here long enough, you see right through that garbage, you know? Like, everybody gets their moment where they'll see through their idols, you know? Where they'll just be like, oh, this person is just saying whatever they need to say because it's getting them whatever it is that they're looking for. And what that is not a good trading portfolio. CT probably 12K mood again. Like all you have to do is just look at the sentiment. The fact that we're trading at prices where I once promised, once upon a time, like you guys, if it's your first time here, the veterans know what I'm talking about. I promised to put on a seahorse costume over here, and I never thought we'd actually get here again. not in the recent amount of time that we've been here, and here we are again. Like I'm in disbelief, but like a good disbelief, not a bad one. You know, and it's just fucking 1-2 buckle my shoe. Negative gloom and doom up here, and I can't make any sense of it. The only sense I can make of it is you guys got, and I mean you guys, and I say that generally, I'm not saying everybody, there's a lot of smart people in this chat for sure, just a lot of people just fall for the fucking shitcoin, man. And I know it's fun, but there's a time and place to play it. In these past 3 years, like, what was your long-term strategy to build? Anything solid? Probably not. That's why you're coping. When Bitcoin's at 70K for me, I'm fucking euphoric. But euphoric in a way that's like I'm happy, but I'm not surprised. What do I think about OXO profit levels? I think one place to reconsider now that you're in the 50 to 60% drawdown area is going to be towards 0.36. I think this would be a nice area to take a chunk off. Got a really nice set of bids here. 36, you could probably pay yourself back from this allocation down here, and if you want to get a bit riskier, the allocation that you made in the 30 or the 40% drawdown area, you could probably ride it out in the event that, you know, say it decides to do this, consolidates, wants to continue moving higher, you could do that, right? But I'd be looking at 36 for a daily swing. That would be the only price I'd be worth closing out at. Powell's about to start in 3 minutes. So any last questions you guys got before we let Powell take the throne here? It starts in 3 minutes. We are waiting. We are waiting. FOMC's already happened, so anybody who's just joining us, 5.5 to 5% is the unchanged rate, so the same as last month and the month before and the month before and the month before, pretty much for all of 2024. We're going into this with a dovish expectation that numbers are being met and 2%, yada, yada, yada. Powell fucking word vomit into telling us that lower rates are on the forecast and that we should be seeing one relatively soon, yada, 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 yada. You guys have been here a million times, right? Take care, Thragus. It was a pleasure to see you again, my man. Hope you're doing well. When Seahorse costume, I don't know. I don't know. I didn't think it would happen. Please let me walk away with the right idea to close. This is going to start in just a minute. So I'm going to turn the music off here. I'm going to turn this on. Let me know if the volume levels are good, please. You guys hear that? Hear that elevator music? Shit's about to go down. Loud. Okay, turn it down. How many coughs we get today? I don't know. It's out of tune? What do you mean? Oh, shit. Okay, let me... All right, let's go. Sounds like you're on hold with your bank. I know. That's exactly how it always sounds. I'm just watching this person scroll through their... Oh, there he is.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals
volume's good.
maximum employment and stable prices for the benefit of the American people. Our economy has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance with continued strong job gains and a low unemployment rate. Inflation has eased substantially from a peak of 7% to 2.7%, but is still too high. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone.
What'd I tell you?
Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.3% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, grew at 2.8% in the first quarter, nearly as strong as the second half of 2023. Growth of consumer spending has slowed from last year's robust pace, but remains solid. And investment in equipment and intangibles has picked up from its anemic pace last year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2.0% over the next 2 years. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 218,000 jobs per month in April and May, a pace that is still strong, but a bit below that seen in the first quarter. The unemployment rate ticked up, but remains low at 4%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market have returned to about where they stood on the eve of the pandemic, relatively tight but not overheated. FOMC participants expect labor market strength to continue. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.2% at the end of next year. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in April. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The Consumer Price Index, which came out this morning and tends to run higher than the PCE price index, rose 3.3% over the 12 months ending in May, and the core CPI rose 3.4%. The inflation data received earlier this year were higher than expected, though more recent monthly readings have eased somewhat. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.6% this year, 2.3% next year, and 2.0% in 2026. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As labor market tightness has eased and inflation has declined over the past year, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. The most recent inflation readings have been more favorable than earlier in the year, however, and there has been modest further progress toward our inflation objective. We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%.
Well, that's not good.
We know that reducing policy restraint too soon or too much could result in a reversal of the progress that we've seen on inflation. At the same time, reducing policy restraint too late or too little.
So like he's just being a bitch.
Activity
like
and
he's just being a bitch. He's going completely back on what he said. There's no
any
credibility
adjustments
left
to
from
the
this
target
fucker,
range for
man.
the federal funds
I'm
rate.
telling you.
The committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SCP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.1% at the end of 2025, and 3.1% at the end of 2026.
So they're telling us there's a
These
chance.
projections are not a committee plan or any kind of a decision. As the economy evolves, assessments of the appropriate policy path will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we're prepared to maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we're prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate.
This guy's worse than a
We'll
paid
continue
group
to make our
leader.
decisions meeting by meeting, based on the totality of the data and its implications for the outlook and the balance of risks. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices
Yeah, because
over the long run.
he was telling you that like
Our
we're
success in
nowhere
delivering
near.
these
Hold
goals
on.
matters
I'll
to
talk
all
about this.
Americans. We understand that our actions affect communities, families, and businesses across the country.
There goes the disclaimer
Everything
again.
we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals.
He's like a broken
Thank you,
record. This
and I
guy.
look
All
forward
right,
to
all right. Before the questions start coming in, okay? What this guy said in the beginning was that, in the beginning of the year, we were convinced that we'd be lowering rates, we'd be doing this, and now that the data has come out again, we're not meeting those expectations. So in the beginning of the year, everybody was all fucking cock teased, for getting lowered rates 3 to 4 by the end of the year, and then that changed into okay, so it's not happening Q1, it's going to happen Q2, and now that we're entering like the Q3 phase. Now he's saying, oh well, look, what we said at the beginning of the year is no longer like there's no more credibility from the direction of the Fed. But all that to say, he came out guns blazing with like the hawkish shit. Started saying like, oh, we're nowhere near, and it's not how it looked like at the beginning of the year. Despite it looking okay, it's nowhere near where we need it to be. Then he comes out and busts you with the, but here's a chart of how low we plan to get in the next 3 years, knowing damn right nothing has changed in the past 6 months. It's like they continue to push the envelope. It's almost as if the inflation numbers are not real. in the sense that they're a lot worse than they're making it look, and they don't like there's nobody telling you that. That's a bit more of a conspiracy side, but I'm pretty sure you guys understand how expensive things have been. But like it doesn't make sense with what they're telling you. So like again, when we're getting told that rates are going to get lowered at the start of the year, and we're already about to enter the third quarter of the year, and they're telling you, oh, we're not there anymore, and then they go and tell you, oh, but this is where we plan to be. Yeah, the market has a positive reaction from this now. It's because he went with all the hawkish shit, waited for all his friends to stop selling, and then bought it up. I'm obviously joking there, but I'm just saying like it's so unpredictable that it's completely unpredictable. Anyways,
It seems strange for you to be cutting rates at all.
it's just I've been waiting for so many rate cuts now. It's just not happening. It's just not happening. And every time he comes out saying that.
What we said is that we don't think it'll be appropriate to reduce rates and begin to loosen policy until we have more confidence that inflation is moving back down to 2%
What does that even mean? What does this guy say?
Sustainable basis. And that's the test we've applied. I don't know that this rules that in or out. I mean, really, it's
What do you mean you don't
forecast,
know?
a fairly conservative forecast month by month that would lead to slightly higher 12 months rates by the end of the year. If we get, good.
Oh my God, he's using hand gestures. It's over.
Then we'll see that come down or remain the same. If you're at 2.6, 2.7, that's a really good place to be.
Everybody asks questions. There's this. Everybody's got questions
Nick
here.
Timmerows of the Wall Street Journal.
Not
Chair
this guy.
Powell, if I look at the rate projections, I see 15 of the 19 that are anticipating either one or two cuts this year, fairly evenly split between the two. And so I wonder if you could explain a little bit more the nuances or the differences there. Would 2 or 3 more inflation readings, like the one that we saw this morning, make a September interest rate cut possible?
So
He's like a paid group member. Sir, up or down?
Concerned. As you know, I talk to all of the other participants on the FOMC every cycle, and we talk about their summary of economic projections and the their dot plot and everything. And what I hear and see is that people are looking at a range of plausible outcomes, and in many cases they're thinking, I don't really, I can't really distinguish between two of these. They're so close for me. These are very close calls. But we ask them to write down the most likely one, so they do. And I think as you've said, there's 15 of the 19 are kind of clustered around 1 or 2. So I think I would look at all. I look at all of them as plausible, but I'd look at I think that does tell you kind of what the committee thinks. But what everyone agrees on is it's going to be data dependent. No one brings to this or takes away from it, that is on the committee, a really strong commitment to a particular rate path. It's actually just their forecast, and it's a combination of their forecast and their own reaction function. But again, everyone would say that this is very data dependent, and I don't hold it with high confidence. And I think if you're looking for and don't really think that they're not trying to send a strong signal that this is what I think is the right thing. It's just
There's no way he
what they
just said
think
he
at a
has
given
no high
moment in time,
confidence.
subject to data. In terms of future meetings, we haven't, we don't make decisions about future meetings until we get there. I think in terms of what we need to see, I mentioned it earlier, we want to gain further confidence. Certainly more good inflation readings will help with that. I'm not going to be specific about how many, because really it's going to be not just the inflation readings, it's going to be the totality of the data. What's happening in the labor market, what's happening with the balance of risks, what's happening with the forecast, what's happening with growth. You look at all of that and you ask, are we confident? Have we reached an appropriate level of confidence that inflation is moving down sustainably to 2%? Or alternatively, do we see really unexpected signs of weakness in the labor market that would call for a response? Which is another thing that could happen. But again, we don't see that. And we see today's report as progress and as building confidence, but we don't see ourselves as having the confidence that would warrant beginning to loosen policy at this time.
And if I could quickly follow up, did you or any of your colleagues change your interest rate projections after 8:30 or whenever you got the inflation numbers today?
So this happens too often, but it does happen. It just is, data came, I think it happened a couple of meetings ago, a few meetings ago. So when that happens, when there's an important data print during the meeting, first day or second day, what we do is we make sure people remember that they have the ability to update. We tell them how to do that. And some people do, some people don't, most people don't. But, and I'm not going to get into the specifics, but you have the ability to do that so that, what's in the SEP actually does reflect the data that we got today to the extent you can, reflect it in one day. I think you will see PPI tomorrow. We'll know more about the PCE reading as the month goes on, but the initial CPI reading and its, kind of first level translation to PCE, we did have this morning. We were briefed about it, and people were able to consider whether they should make changes. And as I said, some people generally do, but most people generally don't.
John Allen.
Hi, Chair Powell, Janelle Marte from Bloomberg. As you noted, the labor market is now in many ways back to where it was before the pandemic. I wondered if you could comment on how officials are viewing that. So do you think that there still needs to be more cooling in the labor market to bring inflation?
Yeah, the guy is a professional politician. He knows exactly how to say absolutely nothing but everything at the same time. He is a paid group leader all the way. Bullish, bearish. We'll see how it goes. Fuck it. We'll see how it goes. Imagine the guy in charge of monetary policy saying, well, we don't really fucking know. We don't have high confidence on the data as it comes in month by month. So fuck it. We'll just see how it goes. Like that's so crazy to me. That's so crazy.
Come up quite a bit through immigration and through recovering participation. That's ongoing mostly now through the immigration channel, but still we've had some increases in prime age labor force. In terms of on the demand side, we've seen quits moving down.
He did say fuck it.
We've seen job openings moving down. We've seen wage increases moving from very, very high levels a couple of years ago back down to more sustainable levels. We have seen unemployment creep up now 0.6 over the course of a year or so, very, very gradually. So you put all that together, what you have is still low unemployment, still 4% unemployment, historically low. But it's moved up a little bit. It's softened a bit, and that's an important statistic. But more than that, you've got strong job creation. You have payroll jobs still coming in strong, even though there's an argument that they may be a bit overstated, but still they're strong. So that's what we see. We watch the labor market, of course, and the economy as a whole, but the labor market very carefully, and that's what we see. We see gradual cooling, gradual moving toward better balance. We're monitoring it carefully for signs of something more than that, but we really don't see that.
As a quick follow-up, the surveys that make up the jobs report are showing different tales. There's been some divergence, especially we saw in the last report that we got on Friday. So how do you interpret that, and how does it change your view on the labor market?
So sometimes you can't reconcile the differences. You just have to look at it and try to understand, and that's why it always makes sense to look at a series, in 3, 6, and 12 months ofings rather than just one report. But you're right to point to the last report where there were job losses in the household survey, job gains, big job gains.
So I think now we're just going to start talking about like fucking employment numbers and all this shit. Realistically, I got to hear the lean on Powell and how he's thinking about it, which is starting to get like a bit repetitive now, where like you hear the same thing all the time. You have to like kind of filter out the disclaimers that we're doing our very best and priority of Americans and yada, yada, yada. Then it's followed by a new pattern that I'm starting to see where like he'll give you both scenarios in the same question, or he'll answer with both scenarios in the same question. This one was actually a lot more difficult to how do you say, to assume what he was trying to get at, because again, he came out with all the negative and then buttered it up by saying, but this is where we're planning on going. And if it's a common theme right now where we've been seeing him continuously do this, right? Like he's been doing this where it's like, oh, we're not meeting our expectations in the immediate term, but we're still projected to lower and lower and lower down the line. So people keep anticipating this down the line, right? So again, like I'm a bit like conflicted on this one, because it should have been way more obvious that with the reaction we got and the numbers we got, that yeah, I get it. It was higher than previous, but better than expected. So like technically, like if we were just following last meeting and what their intentions are to do shouldn't, better than expectations, even though not being better than like it's there's no more credibility on the words they're saying. Quite literally, bear market. It sounds like he is saying a whole bunch of nothing for saying I don't know, and we're just going month by month until this next election. Like that's like, if I'm being completely honest with you, it feels like they're just winging it. So they're able to hand it off. They're able to hand off inflation is much worse than we thought it would be to another president. Not for anything. I'm not trying to be a conspiracy theorist here, but it just looks like that's what's happening here. They're hiding the fact that inflation's so much worse than they claim to be, and it's almost like they're ready to announce that in the new presidency. I can't stress that enough. It's like I don't know what else to believe though, honestly. How can you push your expectations, right, from the start of the year to now going into Q3 and changing that's not credibility. And if it is credibility, like what information and data are you basing it off of? Because that can't be credible at all, right? Because it's got the Federal Reserve flip-flopping on what they want to do. Yeah, we have plans to lower it this much, but every month they come back and say, oh, we're not meeting our expectations. But you're telling me the data is telling you that your expectations are met. So it's not making any sense, right? How can you say that the data varies month by month, but we're following the data and all the data says that in 6 months from now we're going to be able to lower rates down to here? It's just a contradiction after contradiction. There's no credibility left with this administration. I don't know. How are you supposed to navigate this? It's a bit ridiculous. That's what I'll go off on saying this, because this FOMC, I thought we'd get much more of a clearer answer, and instead we just got, oh, well, it can go up or down or sideways. So with that being said, met expectations, better than expected CPI numbers, but worse than previous. Where do you go from here? I'm going to stick to the trend that has done well, regardless of lower interest rates, regardless of higher interest rates. And I stick to that. I don't know if there's anything left for us to cover here. I don't want to hear him just babble about like how we're following the data and sticking to 2%. Like you guys know how it is. I usually hear his first 3 questions that are usually surrounded about like mostly around, do we plan to lower rates? And then usually jumps into like employment numbers, and like that just doesn't concern me too much. I don't know where to go from here. I'm a bit neutral on this. Again, I closed my trade on the FOMC announcement. I didn't like the reaction. So far, it's just kind of hovering around where I closed. I don't know where to go off from this one. It's a bit up in smoke. I thought it would be a dovish meeting, and instead it was just oh psych. By the way, we're nowhere near our numbers, but it could change. Like what the fuck is that? So again, if you're looking to trade this, other than the CPI announcement, you've just been getting chopped to bits if you've been in a trade for the remainder of the day. So again, what does this tell us? I don't know, but I'm most likely going to assume 67.7 back to 68.2 is where we're heading. Signs to assume that changes is if 68.9 or 68.975 ends up holding out, absorbing the bids, and then we continue to take off from there after the meeting. But realistically, very, very difficult to gauge this one. Not exactly as straightforward as I thought it would be. And with that being said, I think
the level of restrictiveness that you need, that you in fact have concluded that you weren't quite there yet.
Let me just hear this last question.
To try to draw that conclusion, I think this is about looking at the incoming data and asking how much progress are we making on inflation, and how is the rest of the economy doing? Is the labor market still strong? That's what we're thinking about. You can translate it into the language you're talking about, but to me the focus is more on, we have a goal which is price stability, another goal which is maximum employment. How are we doing there? We think we've got a good, strong labor market still. We think we've been making progress toward the price stability goal, and then for a while there was a pause, and we look at today's thing and we think, well, that's a good reading, and we hope we get more like that. And in the meantime, we're asking, is our policy stance about right? And we think, yes. it's about right. We're prepared to adjust it as appropriate, but we think we're getting the things that we would want to get, broadly speaking, and that's why we've been at this policy right now for almost a year.
So just to follow up on that, I think one curious thing here is
Oh,
you've
who got liquidated
now this
here?
restrictive
What a fucking
policy in
baboon.
place and virtually no change
Bro,
in any of the major things.
I'm gonna have to pause the video. Who is the redacted that got liquidated for 3.4 mil at 68.2K? Who the fuck? That is crazy. That is the craziest thing I've ever seen. No way he just slammed the 100x slider max leverage into FOMC. There's no way we deal with this level of degeneracy. There's simply no way. Fat finger? That's bad. That's bad. Look at this other one. Look, we have another genius over here. Look. Oof. At least you can see the dust accounts, you know. They were just throwing 100x of whatever $10 they had, $100 they had. It's these ones, man. 50 BDC longs. Like, what are you doing? What are you doing, bro? It's just people getting liquidated at 68K on longs. Like, imagine getting liquidated on the, okay, let me just show you this, how crazy this is to me, okay? Imagine this, okay? Even if you long the absolute Schmiko highs, okay? So you long the Schmiko highs here. Imagine a 7%. You guys are about to make me go back into fucking hibernation. I swear to God. Imagine getting liquidated for 3.4 mil, and I'm assuming you long the absolute highs. In reality, the guy long like somewhere like right here. So imagine just getting liquidated on a 1% candle. Absolutely disgusting. Disgusting. That's brutal. I'll give it to you. That's a brutal one. Although all that just to watch it go back up. But guys, I think we had a terrific stream. 753 viewers. I got to say that's probably a record. No, it's not a record. We've had over 1,000. But we really, for our first stream back in a matter of months, this has been quite the turnout. I want to thank everybody so much for joining. If they learned anything, be sure to let me know. If you're on Twitter and it's your first time watching through Twitter, thanks for joining. I do appreciate you guys, my Twitch homies, my veterans, whoever's been here for a long time that still come to support the stream. Thank you so much. If there's a demand for it, we'll do more of it. But yeah, we'll try and do one. We'll try and do one, maybe at least 3 times a week. But I got to thank you guys so much for coming out here and supporting me. It's been a lot of fun. FOMC is usually more fun than the other ones there, so we'll try to keep it more entertaining with some challenges or something like that. We'll start with like small accounts, 1,000, 5,000, 10,000, whatever, fits the audience more. But thank you guys so much again. I'm going to be signing out now. We got everything we needed from this FOMC. It's a neutral standpoint for me. Again, the CPI caught me off guard, and the FOMC, the reactions from Powell, not the numbers itself, but the wording from Powell going into the start of the meetings just threw me off guard. Closed out on the FOMC announcement. So long the CPI announcement, closed the FOMC announcement, and that's where we stand. So far, so good, paying off for making that decision. But guys, thank you so much for joining. I'll see you guys next time. I don't know when, so just stay tuned. And that's it. All right, guys, take care, trade safe, and I'll see you soon.